Hello, everyone. This is Stock Market Daily. Thank you for joining me today. It is April 6th, 2023. As always, this is not financial advice. Please don't copy the trading strategies because you will lose money. This is only for educational purposes. Okay, so first things first, as you could see that we had a major gap down in the early trading in the morning. This is due to jobless claims that came out today pre-market at 8:30. So the number of claims was higher than expected, and that is what the market used to like, but all of a sudden doesn't like anymore. So we're seeing a sentiment shift. So it used to be that bad data, more recessionary data, was good for the markets because it was kind of in line with what the Fed is trying to do. But now the bad data is bad, or it seems like it's bad for the market. I mean, at least here in the first couple hours of trading, because the market is selling off with the bad data. So we're back to bad data having a bad reaction to the stock for the stocks. Um, so that's something to keep an eye out for. Again, we have data on Friday when the market's going to be closed that everybody's going to be watching. And next week we have CPI, we have Fed minutes, and the banking stocks are going to start reporting. So very active week next week. And it's going to get a little confusing with, this kind of shift in sentiment, I think. So something to keep in mind and keep an eye out for. So let's take a look at the chart. As you can clearly see, we had a gap down and we ended up closing the gap here. This is obviously was due to the data. You could see that the chart pre-market moved with that information as well. But we did come back and we ended up closing a day higher for 0.36% on the SPX. So the trades today were also a little bit confusing, and I came in and out of some trades. I pulled out some trades that are a little early, but regardless, pretty good day today. So let's take a look at the transactions. So on the first trade that I placed was my two puts that were sold at $530 each at 40.60 level. Then I gave it a little bit of time and I entered another one at 40.50 for $320. As the market was coming down, I was selling into the weakness. Now, this one completely got away from me. This was actually the first trade I put on, and these are the 4105 calls. I'm not sure why it did one line by one line here instead of two, but so these options started in the morning at $250 each, and I chased them all the way down to 105. So always when that happens, that's very disheartening, and I hate seeing that. You start at 250 and it's going down, down, and you're chasing it. And literally at $100 and $105 per contract, it almost seems like it's not even worth filling that, just filling that contract. So I should have canceled. I should have never taken this. I should have never taken this trade because my limit is the lowest amount I'll collect is $100. And I was looking at it and I was thinking to myself, as the market was selling down, I was thinking, you know what? I might as well capture at least, I might as well capture $100 here. And, $100 per contract is better than nothing. So that was the rationale for that. And obviously later on, that proved to be incorrect as the market started picking up. We actually went into the money a little bit. However, that was the basis behind that trade. So at the same time, I had the 40 and 90 call here that I placed as well. This one was, let's see where that is, 40.90. This one right here. This one was very aggressive, obviously. Uh, I placed it because the market was moving up, and I figured that we're not going to be able to move up that high with, now that the sentiment has now shifted. Although the market did not, think the way I thought and continue to go up into the strength at around noon at 12:30 Eastern, I placed another call option sell at 41.10. So that will be right about here. And that particular option, after I saw, and I collected $440 on it, after I saw that it is, it's going in the money and it's staying up, I ended up selling it, buying it back at 2 hours later, pretty much. So at 2 o'clock and 2:28, I bought it for $240. So I collected $200 on that option. Obviously, again, not the best move because that option ended up going for a lot less in the hours to come. I could have collected way more premium. At the same time, we had a 40.95 put that I had to buy back because, again, I was thinking that it's going to go, the market, at the end of the day, the market is going to possibly close and start, it's before close, it's going to start going down. So I spent $90 on that. These 2,800 puts, the three of them, these are just my puts that I'm entering when my puts that I use to place these cells with are expiring. So my puts are expiring today. Let me show you that. 1 second. So these are expiring today, and I use these as vertical spreads to place these right here. So now that I've purchased the April 27th ones at 2,800, I'm going to be able to, let me go back, I'm going to be able to sell these right here all the way through April 27th. Okay, so I hope that makes sense. So I'm using these to hedge basically these right here. Okay, and I'm gonna obviously not do it for the 6th, I'm gonna do it for the 10th, 11th, 12th, and so on. So that's why I have to buy those. If we go back, this call that I placed here now it's the end of the day. So I now had to roll this call to Monday on April 10th. And this one, I could have rolled it to 41.15. However, I chose to collect a little bit of premium on it and keep it at 41.10. I felt like that's a good number to roll it to. That's a good strike price to roll it to. This one, the 41.15, I would have collected, I believe it was like $20 or $30 worth of premium at the time when I was doing it. And I wanted to capture a little bit more premium by rolling it here. I know there's going to be data on Friday and it's going to be a tumultuous week. However, it's only one option right now that is trapped on the call side. So I felt fairly comfortable. I have 4 others that I will be able to sell on Monday and the next week. So collected $370 premium on that. And here we have the 41.05s that I sold here. Where are they? 1 second. Right here. So these are the ones that I bought or I sold early on, the ones that I was chasing from 250 all the way to 105. I ended up buying it back for $35 each. So that trade really didn't work out. These options were way more expensive. 4105, let's take a look. They were right here. I mean, they ended up closing in the money. So, oh, sorry, that's not, that's the wrong date. So they ended up closing in the money. However, they were way more expensive early, right before close. So I'm happy that I was able to close them out for less than what I bought them for, at least. But again, complete reversal on the market. Everything that I thought was going to happen ended up not working out. However, everything turned out to be okay in the end, because I was placing these call option sells, and really did not anticipate the market to recover like this. So at any rate, we collected $2,415 on the day today. And next week is going to be, like I said, very busy. There's CPI, Fed minutes, and bank earnings all in next week. So I hope everyone has a good weekend, and we'll see you next week. Thanks. Bye-bye.